Nearly 8 years since its rollout, GST remains a work in progress, with several critical issues still awaiting resolution. This discussion focuses on these unfinished pieces of the GST puzzle and what it will take to truly complete the reform in both in spirit and practice. We have with us today MS Money, partner Indirect Taxes Deloitte India, to help figure out the unfinished agenda in the GST reforms. Mr. Money, good to have you with us today.
Thank you very much.
Great. So let's come to the unfinished agenda. And it's something that I personally did not think would be out of GST ambit for so long. I think in 2017, when we were doing all the road shows around the country, uh, one question that was kept popping up was petroleum products continue to be outside GST. And 8 years, it still continues to be outside GST. What are your views on this?
See, petroleum products remaining outside GST does not make any kind of economic sense. Because if all products can be covered by GST, inclusion of petroleum products will not require a constitutional amendment or anything of that kind. It's already in the GST framework. All that it will require is for the GST Council, center and states to sit together and find out a way of having a phased roadmap on how we include petroleum products in GST. And they could possibly be doing this by not going in for a big bang, because there is an apprehension that there will be some losses which states will incur to their revenue. And therefore, it can be done in a phased manner also, where possibly we start with natural gas, which impacts only certain states. It doesn't impact all the 30 states. Depending on the experience of natural gas, after a period of time, say 6 months, we move to aviation turbine fuel, which again impacts some of the states. It doesn't impact each and every state. And depending on the experience gained over there, then we finally go for the big boys in the business, which is petrol and diesel. But it is, to my mind, time now for us to put a roadmap for the GST Council to decide. And it can wait. It is not something which needs to be done tomorrow. But when we are into the 8th year of GST, having no clarity on inclusion of petroleum products, because bear in mind, petroleum products are an input to virtually every single business. It's not something that is an input only to transporters and certain transport related businesses. Since petroleum products are outside the GST ambit, the cost of the petroleum products are significantly higher because the taxes paid on those cannot be offset against anything else. And this finally gets passed on to the ultimate consumer in the form of higher prices across sectors. And that is the reason why possibly this is the right time for the GST Council to start putting together something like a roadmap which says over the next 1 year, 2 years or so, how are we going to look at it? What do we need to do about it?
So, if petroleum is one of the products which are out of the GST ambit, uh, how will you mentioned it in your previous question, but how will this help businesses when it is included? You mentioned that it's a part of almost every organization. Uh, how will this help? And given the new rates that we have, again there are some products and services which are outside the GST tax slab. They would continue to suffer from ITC not being available in petrol products.
See, there are a whole lot of products which use petroleum products or their derivatives as an input. And there are very few businesses which do not use any petroleum products as an input. There would be very, very few. So if the taxes paid on petroleum products are in the nature of GST and the business is paying a tax liability on GST, they can offset the taxes paid. Now, the taxes that are paid on petroleum products today cannot be offset against GST. To that extent, the cost of the petroleum products goes up. So that is the reason why, and again, petroleum products value-wise are a significant chunk. For the country, for all businesses, it's a significant chunk. And therefore, that whole chunk remaining outside GST, when we have done so much of reform in GST, when we have taken so much care to ensure that the GST sector is broadened, to me, the logical next step would be petroleum products. And together with that would also be some taxes that are left out of the ambit of GST. Something like stamp duties, which are levied by every state, registration charges, which are levied by each state, electricity duty that is levied in many states. These again could be included in GST in future.
Mm, right. In our last discussion yesterday, we talked about the ITC part of it and the need to maybe reimagine ITC. Do you think there is a way that there can be unconditional ITC without any restriction? What will be the effect then? Will it be all positive, or are there problems associated with something like that?
See, the general thought when it comes to any VAT GST system anywhere is that if anyone manufactures an exempted product or provides an exempted service, generally there will never be any eligibility to claim ITC. Because GST being in the nature of a value added tax, it is essential that the taxes paid on the inputs are offset against the taxes payable on the output. If the output is exempted, to that extent, the value chain breaks at that level. And therefore, as a general principle in value added tax across countries, if the final output is exempted, in that case, there is no eligibility to claim the input taxes. However, considering the fact that we are a different kind of economy, we are extremely aspirational, we also need to bring down the costs for all our manufacturers so that they can compete better in the workplace. Atmanirbhar Bharat, which we have been discussing in a lot of detail in recent times, also means that we have to make our businesses more export competitive. And one way of making some of our businesses export competitive is to give them a vested right to claim ITC the moment they pay to the vendor. As soon as a business makes a payment to a vendor and that payment includes an amount of GST, it should become a vested right for the business to claim that credit, irrespective of whether it has an output liability or does not have. If that happens, it will be path breaking and wonderful.
Mm, right, heartbreaking and wonderful. There's another wonderful thing that companies were waiting for is the centralized audit. Based on where you are headquartered. What are your views on that?
That's a very good point that you have, picked up because this is something which many businesses have been spending a lot of time, effort, energy in dealing with. And to put it in perspective, if we look at service providers, for instance, in the pre-GST era, service providers had the facility of a centralized service tax registration, which was one registration that they had in the entire country from which their operations were headquartered, and they could use this registration to provide services across the country. And one registration necessarily meant they had to file one return. Bear in mind that during the service tax period, the return filing was only twice in a year, it was not every month. The payments were to be made every month, but the return filing was once in 6 months. GST altered that for service providers also, and GST came out with a system which said that you need to obtain a registration in each state where you operate. So any business, a bank or an insurance company or a software company, for instance, which earlier had one registration to operate in India, was filing two returns for the year, suddenly was thrust into a situation where they had 30 registrations in 30 states. They had to file 30 returns every month, which makes it 360 returns a year. So from two returns, it went up to 360 returns. And most businesses adapted, accepted, and went ahead with it. The recent issues over the last 2 years or so has been that in each of the states, the tax authorities have started doing an audit of the returns file. Now, the difficulty over here is twofold. Most companies typically do not have the bandwidth to handle tax queries in each state because when they operate in states other than their headquarters states, typically they have their people who are into sales and operations. They do not have tax professionals. Some of them may not even have finance professionals over there. So for them to deal with this means in the headquarters state, they need to keep sending people to each state to answer and address the queries of the tax authorities. The second aspect, the second aspect is that when they do this on an ongoing basis, they end up answering the same question over and over again. So there would be certain states where there is a good awareness of the practices of, let's say, a bank or an insurance company or a software company. There would be certain states where the level of awareness may be less, but they have no choice but to depute people to each of the states, answer all the queries. And that is the reason why possibly the expectation is in the next stage of reform that the GST Council may consider, would it be possible to have one common centralized audit in the place where the organization is headquartered? And once this is done, once the audit is done, the findings can be disseminated to the other states. If there are a few state specific issues that a state wants to take up, yes, of course they can be taken up. No problems at all over there. But a multiplicity of audits today is just stretching time, giving people difficult times to deal with various authorities in various states, explain the problems over and over, logistic challenges in making people travel to states, and it's not adding any value to anyone. That is the reason why a centralized audit system based on the headquarter location of the organization would be very, very welcome in the present situation.
Right. Another thing that I think you have also been waiting for, is the GST appellate tribunal. Uh, what's the action plan and the timeline? Is there any action plan and timeline to dispose, pending matters once it starts functioning? Do we know when it starts functioning?
Yeah, absolutely. So there is a lot of clarity in the last few months on GST tribunals, and it has taken time. It's in the eighth year that the tribunals are being set up. But we now have clarity to know that by 31st December, the tribunals will be operational. The benches have been set up, the members have been appointed. And once the tribunals start, there is also a timeline prescribed in terms of filing the cases before the tribunal, when those cases will come up, what is the order, etc. So we now have some clarity in respect of tribunal being set up and tribunals becoming operational. The challenge that businesses are going to face is that in the initial few months of the tribunal starting to work across states, the workload for the tribunals is going to be immense. And therefore, getting their matters listed, getting the matters heard, complicated matters which will require multiple arguments to be done. Those multiple arguments will require counsel to go to various places to argue those cases. That is something which is going to occupy a lot of time of business in 2026.
Mm, right. Last question would be, we've come down to slabs and maybe one more with, the 40%. What are the, is it realistic to expect just a one slab going ahead in, say, GST 4.0 or GST 5.0 version?
Extremely difficult to contemplate that because in most of the other jurisdictions where GST has been implemented, typically there are two rates. One is for essential goods and the other rate is referred to as a main rate. And right now we have come to that level to say we only will have a 5% for essentials and an 18% for everything else. So compressing this further to one rate will not be feasible in a very diverse country like ours, because the product mix, the diversity of the products that are required to be sold, the diversity of the states that are there, and the diversity of new products which keep emerging in every single business will not allow us to unfortunately have one rate. So for some period of time, some extended period of time, I think we will be having two rates of 5% and 18%.
Mm,
The 40% rate is for very selected goods and largely sin goods. So that is something which we don't need to worry too much about in terms of how those products will get taxed. That's an industry specific issue only for that particular sector.
right. I think I have just one more follow-up question, not a follow-up, additional question. We had a lot of discussion about, which amount to stuff like, is this ready-to-eat food or is this paratha, this, that, different slabs for different thing. Has that been finally addressed? And are our HSN codes in place to remove any ambiguities, where which product gets taxed at how much?
Oh, so that's very interesting because from a consumer perspective, this would be very, very relevant. So the good side is that all the controversies about whether it is a roti or a paratha or a Malabar paratha are out. Everything is now the same. There is also now no difference between the various types of popcorn that people were accustomed to eating. There is also no confusion now in terms of whether it is a bun or a donut or a cream donut or a normal donut. All those issues are matters of the past, which maybe sometime in future when we look at those decisions, when we look at what advanced ruling said, how they were argued, we will look at them with a bit of hindsight to say that should this have been there originally or not. The good side is all that is behind us, and we don't need to worry about those in future.
Wonderful. On that note, I think it's time to get the popcorn out and to have a donut or two. And as today's discussion has shown, the unfinished elements of GST are not just the technical gaps. They're directly affecting efficiency, competitiveness, and the ease of doing business. Addressing issues such as inclusion of petroleum, streamlining audits, simplifying ITC, and expediting GST appellate matters will be crucial to realizing GST's original promise of seamless nationwide indirect tax system. Thank you so much, Mr. Mani, for joining us and being us through everything. Thank you.
Thank you very much.